a lovely room and a lovely evening. Thank you all so much for being here. If you don't know me, I'm Margaret Mueller. I'm the president and CEO of the Executives Club of Chicago. Welcome to our first program of the season. We are kicking off the season with our very own Darrel Hackett, president and CEO of BMO Bank and board member of the Exec Club. Under Darrel's leadership, BMO continues to soar nationally and in Chicago, where they remain the biggest bank in our city. Before we begin, I'd like to thank the organizations and individuals who support our mission to be the nexus of the Chicagoland business community. First, I want to welcome and thank the many members of our board of directors and board of advisors in attendance today. It is a testament to Darrel's leadership in the business community that they have come out in full force to support you today. So I'll ask you to just stand and be recognized when I call your name, and then we'll hold applause, and you can all sit when we're finished. So first, Mary Cook, Managing Director of Corn Ferry, Jessica Fairchild, partner of Croak, Fairchild, Duarte, and Berries, David Gupta, Executive Chairman, SDI Presence, Teresa Wilton Harmon, Managing Partner, Sidley, Mark Heckler, Regional President, Fifth Third Bank, Tom Kunst, CEO, United Healthcare of Illinois, Kristen Prince, Founder and Managing Partner of the Prince Law Firm, Imran Qureshi, Head of North America, WTW, Nadia Rawlinson, Co-Owner and Operating Chairwoman, Chicago Sky, Dan Ryan, Managing Director, Mortenson Properties, Chris Shavink, CEO, Shure Incorporated, and our current chair of the Exec Club Board of Directors, Julie Scott, President, CEO, and Founder, CTS Impact, Robert Seven, President, Chicago Region Savills, Charles Smith, Founder and CEO, CS Insurance Strategies, Len Starrett, Vice Chair, Deloitte, and Laura Tone, Chicago Office Managing Partner, PwC. Thank you all for being here. Oh, I did forget someone. I am so sorry. I was just going to say, did we forget someone? Sheila Mulligan, Regional President for Weber Shandwick. Sometimes we forget people. Thank you all for your commitment and your leadership to our mission. I also want to extend a sincere thank you to our presenting sponsors today, BMO, our featured sponsors, Sidley, and the Business Leadership Council, and I want to thank all of our seasoned sponsors whose support makes all of this programming possible. I know people say this all the time, we couldn't do it without you, but it is so true. If we did not have all of these sponsors, we would not be in this room, we would not be able to do any of this. So we're so grateful to all of you. And last but not least, thank you to our members who are here today. You are the lifeblood of the Exec Club community. You are why we are here. If you're not yet a member and you're interested in learning more, find anyone with a staff badge. We're all happy to talk to you. And please now join me in welcoming Teresa Wilton Harmon. She is our second vice chair of the Exec Club board. She's also the co-managing partner of Sidley Chicago office, and she's going to be introducing our moderator and speaker.
Margaret, thanks so much for that introduction and for your tireless work on behalf of the Exec Club and on behalf of our city. I am a Sidley partner. Sidley is a finance-forward and a Chicago-forward law firm, so we are extra excited to be co-sponsoring tonight's event. And with my colleagues here today at the Sidley table, we are delighted to welcome our speakers. As a board member and as an officer of the Exec Club, though, I'm extra thrilled to welcome each of you to our conversation today. Exciting developments are unfolding at BMO Bank and for Darrel Hackett. As the president and CEO of BMO Bank and as CEO of BMO Financial Corp, Darrel's journey has been 2 decades in the making. Under his leadership, BMO has experienced purpose-driven growth and made significant strides in its communities. Over the past year, Darrel's role has become even more pivotal. Not pitiful.
Wow! Let's go.
I just wanted to make sure you were all listening. Darrel's role has become even more, everyone say it, pivotal. Including with the recent acquisition of Bank of the West that propelled BMO to the top position in Chicago and into the top 10 nationwide. Darrel is also so committed to the Chicago community, serving on 10 key civic and charitable boards, including the board of our own Executives Club of Chicago. Thank you, Darrel, so much for your leadership and for your sense of humor. Joining us today to share in the conversation is Andrea Sáenz, President and CEO of the Chicago Community Trust. Andrea's leadership at the Trust and in Chicago stands out for its thoughtfulness, and for its commitment. BMO Bank and the Chicago Community Trust have a long history together, dating all the way back and serving Chicago back to 1915. So please give a warm welcome to two impactful Chicago leaders and dear friends of our club, Darrel Hackett and Andrea Sáenz.
Thank you so much, Teresa, and thank you all for spending your evening with us. Good evening. The weather outside is beautiful, so it was a little tough to walk in here and have to be indoors, but I'm glad you all decided to join. I do want to just spend a minute to say, what a special relationship the Chicago Community Trust has enjoyed with BMO and the Harris Bank portion of BMO. In 1915, Norman Harris and his son Albert Harris founded the Chicago Community Trust as the nation's second ever community foundation, just after the Cleveland Foundation was formed. And ever since then, the bank has been one of the trustees of the endowed funds that allow us to do our work, make grants, support communities all over the region. And Darrel himself now serves on our trustees committee, one of 5 bank leaders that we work with on a regular basis. So this is a really wonderful and special evening for me and for us at the Trust. So thanks for inviting us to join you on the stage, Darrel.
Thank you for joining me.
Yeah. So it's been a little over a year since you were named President and CEO of BMO US. Can you tell us how it's going?
Hope it's going pretty well.
Pitiful,
So,
I heard.
Teresa, thank you. Teresa, that was a great icebreaker, by the way. You lighten the mood for everybody. But it's been a bit over a year, but it's been a lot of fun. It's been a really good year in banking. And for those of you that are here, I think you know us because of our deep history, 40 years here in Chicago, and I'll talk about that a bit. But it's also been a year of us introducing ourselves, particularly because of the bank acquisition out west. But it's been fun because it's an opportunity for us to just tell our story and some of the story that we're going to talk about today.
Great. Okay, let's start with you. I would love for you to share a little bit about your personal background, your personal story. I know you moved a lot as a child, and you eventually started your career as a mechanical engineer. How did you end up as president of a bank?
Yeah, probably not the most common background for the leader of a bank. But if I tell you a little bit about my story, I grew up in an Air Force family. So I moved around a bit when I was young. And when my father retired from the Air Force, we left San Antonio, Texas, and we moved to a city, maybe I should call it a town, of 50,000 people called Oak Ridge, Tennessee, right outside of Knoxville. Not sure if anybody's heard of it, but a couple people.
Yeah?
But I'll tell you, just moving there probably changed the trajectory of my life in some ways. My dad's from Philadelphia, West Philly High, for those of you that know Philadelphia. My mother is from the Philippines. And when he retired, he made a deliberate decision to move us to, he wasn't really to take us back to Philadelphia. And he moved us to this town in Oak Ridge, which, for those of you that don't know, it has Oak Ridge National Lab, and it was where they built the Manhattan Project. The first atomic bomb was built. So it happened to be the city that had the highest number of PhDs per capita of any city in the country.
That's shocking.
Most people wouldn't think about that, but I'm a middle child. My older brother and I, we idolized our father, really hardworking, and really did a great job taking care of us. We didn't have a lot of means, but he was a non-commissioned officer in the Air Force, and that's what we were going to do. So when we moved to Oak Ridge, the expectation of us changed. So I think that just says something about what environments can actually do. So I didn't even think about it when I went to college. I was going to be a mechanical engineer, and if I was going to do what the community expected me to do, I was actually going to have a PhD in engineering. And I didn't make it that far because I figured out that there are other things to do. But long story short, I was a mechanical engineer that started my career at GE in the Jack Welch days when it was the largest company in the world, and then moved here to Chicago to work for McKinsey & Company in management consulting, and then 20 years ago joined the bank.
Wow, 20 years. Okay. So you became CEO after 19 years at the bank at a really exciting time, right before the acquisition of Bank of the West. that move nearly doubled BMO's U.S. footprint. Can you tell us a little bit more about what the acquisition did for BMO, what it means for you, what it means for clients, what it means for partners?
Yeah, so I'll go back just a little bit here on the BMO story. Many of you will know us originally as Harris. So when we entered the market, when BMO entered the market, it was 40 years ago in 1984, and it really started through the acquisition of Harris Trust and Savings Bank. And at that time, that made us the third largest bank in Chicago, the 34th largest in the country. And I didn't join back then, I joined later. And after I joined, we made an acquisition of M&I Bank in Milwaukee, largest bank there in Milwaukee, but that actually helped us expand throughout the Midwest. So we went from a Chicago-centric institution to a bank that actually had a really big U.S. Midwest presence. And then about a year and a half ago, we closed the acquisition of Bank of the West, which gave us much more presence and concentration out west in California, but also in places like Denver and Arizona and New York and places where we already had presence. And it doubled the size of our client base. Now we have 4 million clients. But more importantly, we're now, well, by far the #1 bank in terms of size, headquartered in Chicago, but also one of the 10 largest banks in the country. So it was a substantial move for us, and the journey's been, quite an exciting journey for the bank.
So could you talk a little bit more about what that's done to the culture of the bank? Because that's a huge set of changes.
Yeah.
Regional differences, all kinds
Yeah.
of other differences. How are you managing?
Yeah, look, I'd say historically, we went from being a community bank, when I talk about Harris Trust and Savings, and we have one of our board members here, Darrel Hackett. We actually had 13 different charters, so we literally had 13 different boards that were different community banks. And we worked through that, and as we started to grow, we became a regional bank. Now, being one of the 10 largest, we're basing emerging national. And, the culture is different because we're different, quite frankly, but what's not different is the purpose that we live by, what's important to us, what matters, the impact that we actually want to have. We're just bigger, and we're hopefully also better.
So I was sharing with Darrel before we came up on the stage that my family recently moved to Hyde Park, and the neighborhood bank, the BMO neighborhood bank, my husband has been spending a little time in this week doing some things, and he has been texting me from the bank every time he visits, remarking how it feels like a community center, talking to me about how the bank staff know all the customers by name. They ask them how they're feeling. They ask them how they're doing. They catch up on whatever they were talking about before. And how extraordinary that is for a bank that has 4 million customers. How have you managed to preserve that community bank spirit?
Yeah, look, we're here to help clients make real financial progress. And to do that, you really have to know who your clients are. And, I have over 20,000 colleagues throughout the country. Many of them are here today. Thank you all for coming in. Thank you for the support, Team BMO. But they go to work every day, trying to do what they can for clients. And clients have always been at the center of everything that we do. And that has not changed as we've gotten bigger.
Yeah, that's extraordinary. Now I'm going to switch a little bit to talking about the things that we get to see you do and interact with BMO about. Those of us who work in the social sector and philanthropy, we see BMO behind so many of the important organizations in our city. So you've talked about BMO's growth and how BMO, and it allows the bank to do more good in more places. So in 2023, BMO gave nearly $43 million in combined community and employee giving in the U.S., and employees logged 34,000 volunteer hours. So many of us have seen BMO's community support in Chicago firsthand. How is BMO continuing to make a difference in these new markets? And please not forgetting Chicago as you think about how to make a difference.
We will never forget Chicago. Chicago is our home and our headquarters. Thank you for citing that. So, look, we do really try to make an impact, and before I talk about what we're doing in some of our other markets, the $43 million you cited, at the same time, every year we have an employee giving campaign, which we do collectively, actually partnering with the United Way, and we historically always have well north of 90% participation, and what we do is we just encourage employees and colleagues to support the organizations of their choice. And it's something that we want to do together because we know that it actually has an impact. And our employees, our colleagues, collectively, last year we put to work $27 million of their money, of their own money, in addition to the money that came from BMO. But when we think about the new markets, we made a commitment as well. We call it BMO Empower 2.0. It's our community benefits plan, which we built on top of BMO Empower, the original. But it's a more than $40 billion commitment that we have to make sure that we're supporting low, moderate income communities in regards to access to housing, some of the conversations that we've had with the trust, small businesses, community investments, community development. And, a certain portion of that obviously is carved out for our new markets, but we're still centered here, and we'll continue to do that. But it's a commitment that we made coming out of the acquisition, but before that in 2000, without any prompting from anybody else, we made our first commitment to put $5 billion to work in the same category over 5 years. And we exceeded that, and we put it to work in 2 years. So we re-upped, and we re-upped eightfold.
Wow. Can you just bring a little bit of that to life for us? What does that mean? What do those investments actually enable you to do, or communities to do?
Yeah, well, look, I'll make it real for us here in Chicago. And this was before the BMO Empower commitment, but I don't know if you all remember back in 2019, Invest Southwest here in Chicago, big deal. And I think we've seen a lot of great progress, but we were the first corporate to commit to it. And we committed to it to the tune of $10 million to encourage others to make the commitment. And what was great about it was defined and it was focused on making an impact on very specific communities and not spread all over, but we're able to get it going and to the point where, we've seen the groundbreakings, we're seeing the buildings going up, we're seeing the communities being built, we're seeing companies come in to create jobs, and we're seeing these communities begin to thrive. And we did that. We never do these things alone. Like, we always do it with partners, great partners such as Community Trust. In that case, United Way. And in that case, it was a partnership with the mayor.
Yeah, that's wonderful. Okay, now we're going to get a little personal again and just try to get a sense of your vision for, BMO's purpose, which is to boldly grow the good in business and in life. So what's your, Darrel Hackett approach to this purpose-driven leadership, and how does it impact growth in your view?
Yeah, well, look, I think a lot of reasons. When I say I've been here 20 years, I surprise myself because that's a long time. And when I joined the bank, I wasn't definitely thinking about being there for 20 years. But, I think I'm there because it's been aligned with the way that I think about the world and the impact that I want us to have and I want to have personally. And when we think about our purpose, boldly grow the good in business and life, I'll ask everybody to remember that, BMO's purpose, boldly grow the good in business and life.
Pretty good, pretty easy to remember, I would say.
We're doing a lot of that in these new markets. We're also training them to make sure they know it's BMO, not BMO, it's BMO. I know you already know that. But what we're trying to do is we're really trying to support thriving economy, sustainable future, and inclusive society. Mm-hmm. So, we try to live that in everything that we do. In the support of our communities, we feel that we have a role to play in every community that we're present in as well.
I mean, that really resonates for me, and I've so enjoyed working with you because, for me, that's a real personal commitment. Economic inclusion, how do we create more opportunities for more people to participate in our economy, both for their benefit, but frankly, for all of ours?
Yep.
And it is a huge focus of our work at the Trust. I wonder if you can talk about, and zero in a bit on what BMO is doing to remove barriers to economic inclusion, economic participation for communities that have, frankly, just not been at the table.
Yeah, and that requires work from everybody, but I'll give you all some examples. I talked about Invest Southwest, but I also think about, we have a program called Be More, and I have colleagues here who've been really involved in that, which we started, I think, in 2023. And what Be More does is we're basically creating paths to jobs and financial services, which tends to be higher paying careers for many of these communities that we're talking about. And what we do here is we partner with workforce development organizations In this case, we actually kicked it off with the team from Cara Collective, if anybody's heard of them. They're a really great organization. And what we do is we support Cara Collective in terms of recruiting, training, and developing talent in the community that actually want to go and pursue jobs in financial services. And since we started about a year ago, we've already had probably over about 150 people come through the program. And we're really excited about that. I mean, that's one example, because I do think jobs really matter. We've had conversations in terms of trying to make housing available and accessible, which is a very, very dynamic problem and challenge. And it's not just about the Fed cutting rates here yesterday, but we have lots of programs that we make available. But as you know, in the conversations that we've had at the Trust, sometimes it's not about those programs being available. It's about helping the community know that they're available and giving them the right access.
Yeah, I mean, one of the things that we've been working on collaboratively is creating more homeownership opportunities in Chicago's South and West Side neighborhoods. And the circumstances there are complex. Sometimes there's vacant land. Sometimes the property is not in great shape. Often people, don't have access to the best credit scores, so that do not get the best terms on their loan. So there's so many different pieces of the puzzle. So I just wonder if we can talk about what some of those programs are meant to do. How do they remove barriers? How has your team designed opportunities for people to participate in home ownership?
Yeah, and look, it starts with education. And we have teams of people that will work with organizations like yours and frankly go out into the community and try to educate. And some of the education can be about our programs, but it also can be about how do you actually get yourself ready for home ownership. It also, frankly, will be access and support for down payments. And some of that will be dollars coming from us, but also access to federal programs that are available. So the things that are similar of that nature, we just want people to be prepared.
That's great. Okay, I'm going to switch a bit our topic and go out to the macroeconomic issues and factors affecting us. I'd love your perspective on, it's been kind of a confusing time to understand what's happening with the economy. People are predicting, maybe a recession, maybe not a recession, maybe a soft landing, maybe not a soft landing. Inflation rates historically high. Just recently, the Fed cut rates, but maybe not by a lot. How are you guiding BMO through these uncertain economic times?
Yeah, well, I mean, that's actually what we do. Like, we're there for our clients through every economic cycle, which is important because you need to help your clients sustain. But when I reflect on what's happening, and yes, it's been a bit confusing, and I'm no economist, but I do have the privilege of sitting on the Fed Advisory Council, so meet every quarter with some of my CEO colleagues, and we meet with Chairman Powell and the Fed governors, and we give them perspective on what's going on in the community and the markets, which they want to hear, and they help us understand how they're thinking about things. And the recent rate cut, I think everybody knew it was coming. It was a question of how big it was going to be. And I do have to say, I do think the Fed has done a really good job. Like they just ended the rate tightening process, but to date they've done a really good job managing us through what historically was unprecedented in the pandemic. Mm-hmm. And I think we've seen it in many ways. We've seen people manage their way through it. But the inflation number was, and everybody knows, if you go to the grocery store today, like your bill's going to be much larger than it was for the same items just a few years ago. And that had gotten out of whack. And that's why they held the rates high for a long period of time. Some people would think for too long. But from an inflation indicator standpoint, it clearly was the time to actually begin cutting rates. What they're trying to do is they're trying to make sure they do it in an orderly process. And when they start cutting, they're going to continue to watch, and you can never make promises, but all things equal, the hope is that they can consistently continue to gradually bring rates down. The challenge on the other side is the jobless reports that are coming out are a bit of a challenge. So that's why I believe they were a bit more aggressive. And 50 basis points isn't that aggressive, but they were more aggressive than the 25 basis points that many expected, because now they're trying to manage another challenge on the other side is inflation's coming down, but you also want to make sure that the jobs don't go away, the opportunities don't go away, so people are still vibrant. On the other side of it, when you think about people managing it through, like the consumer has been very resilient, and that is shown, and part of that has been home ownership, and that is the key to many in terms of wealth building. If you think about it, home ownership, lots of American consumers have been shielded to an extent in their largest expense because they have a fixed rate mortgage. And I think the number is 70% of mortgages are 5% or below, 60% are 4% or below. So, they didn't have to, their payment didn't change.
Right.
So they were able to actually get through that. What we're seeing now, though, is the surplus they had in terms of savings through the pandemic is now beginning to dissipate. And now we're seeing credit cards balances begin to grow. And I do think that's reflective of, harder times here in the environment, in the market.
So what does that mean for you as a leader of a bank or a financial institution? How does that change what you advise your team to focus on?
Yeah, well, it doesn't really change what we do, because that's what we actually do, is what we help people through these times. And it's funny, it is these moments in time where people actually look for more advice. Mm-hmm. And our job is to help them think about it long term, help them sustain, help them. What we try to do first is understand what their goals, their dreams, and aspirations are. And then we give advice, which sometimes it's not going to be aligned with maybe what they want to do, but we'll give them the objective advice that they actually need to hear. But, we really try to sustain with them through all periods. And, the bank itself, like we've been doing this for over 200 years, maybe not me. But I love hearing the stories from BMO clients, and I know several of them who've been with us multi-generational, who will tell me, I started my business with a home equity loan from BMO, and now, some of these folks that are telling me this, like some of the richest people in the world, quite honestly, and they talk about how they started with us and what it meant to them as well. So that's what we do.
That must be cool.
That's pretty cool.
Mm-hmm. So I know you don't have a crystal ball, and I assume you're going to push back if I ask you to tell us what's your outlook for the U.S. economy?
I definitely don't, but I'm bullish on the U.S. economy. But look, to me, you got to think about these things over time, long term. And part of what we do is we get people to not overreact. And I reflect on, let's go back to the pandemic. It was March 2020, and if you look at the S&P, like you remember, like they shut down the stock market. I think the stock were down like 12%. I was at March 17th, and the S&P might have been worth $2,400 per share. I mean, look at it now. Like 4 years later, I think we closed the day at over 5,700. Like that's pretty good. That's pretty robust. Like this is like we are part of the strongest economy in the world, and we have to have that perspective. But it's really about just managing over time. So yes, there are always things that can happen, but we're way better off being here in the United States. And it doesn't mean there's lots of macroeconomic things that are happening, in other parts of the world that will impact us. But if you just look at our history over time, you are rewarded by investing in us.
Mm-hmm. I'm going to spend just another moment talking about homeownership, because it is something that we both spend a lot of time thinking about and talking about. And for us at the Trust, we really have seen over and over again how, owning a home becomes, for many Americans, the vast majority of Americans, right, their pathway to having the kind of wealth or the kinds of assets that allow them to plan for their future, invest in their kids' education, think about, doing things with their home. So it's really wonderful when we have financial partners that see it that way and think about how they might change some of their practices even, right, to try to make that possible for more people. So I wonder if we can go back a little bit to both what you're doing to help kind of grow the population of Chicagoans or of people across the country that become homeowners, not just through your lending products, but also even through your hiring practices. I mean, just tying that all together.
Yeah, well, look, I mean, first let me just emphasize like the importance of home ownership. Historically, it is the way that families actually created wealth and passed that wealth on from generation to generation. And we all know that, and we as a company, we acknowledge there has been systemic racism that has not allowed all groups to participate in that wealth creation.
And that racism, just to be really blunt, right, shows up everywhere from the appraisal process, which has now been really well documented, to how people are treated when they apply for loans that differs based on race and ethnicity, to all kinds of other things, right? The redlining that hopefully everybody in this room understands, and how it got us to where we were. So
yeah, but it's a challenge. So you think about it, it's so complex. It is not just about enabling somebody to get a mortgage on a home in the West Side. At the end of the day, you talked about the appraisals. Like the whole community has to come up. For the community to actually begin to appreciate, you have to have vibrancy and commerce that is going on. And that's why I'm so excited about projects like Invest Southwest, because you can't solve this with one single silver bullet. And you have to focus on each community at a time. But I think that's necessary.
And then you're hiring the initiative, the Empower Initiative. Have you had to make any changes to the way that you think about your recruitment process, your onboarding process, to really live into those goals?
Well, I don't know about changes. I think we've maybe changed outreach, right, to just make sure that we cast a broader net. So just like the program that I described, Be More, where we partner with Cara Collective, that was us accessing talent. And by the way, look, we're doing good in the community, but let's be clear, like that's good for us. Like we have over 20,000 people working with us, and we need people who are ambitious and want to do well, and they're right here. They're right here in Chicago. They're in the communities that we actually serve. So I wouldn't say we're doing anything different. We might be partnering in casting a wider net. Same thing as it relates to introducing people, families, communities, companies, small businesses to our solutions. Look, we always have special purpose lending initiatives that we'll have. That doesn't actually really change our credit standards. It makes it more inviting and accessible to communities and groups that maybe weren't initially thinking about it.
I appreciate that. I'm just going to ask a final question, and I'm sure nobody's going to be mad at us that we're not, spending 2 hours up here. So I want to hear from you, again, more from your personal perspective. You've been at BMO 20 years. What is it that keeps you excited about being at BMO, and what kinds of things do you want to be focused on doing, engaged in, for the next 20 years?
Yeah, well, look, I'll start that with a personal question. Like when you think about being at a place and how do you evaluate that with all the opportunities you have, historically, like I've always asked myself 3 questions. Are you having fun? Are you learning? And are you making an impact? And if I could answer yes to all 3 of those questions, I always think, okay, I'm in the right place. I'm still learning, I'm growing, I'm adding value. And I've been fortunate to have those opportunities here at BMO to continue to grow. But what am I excited about? Look, it's not just that we're one of the 10 largest banks in the country. Big matters, but being impactful and purposeful. We are really different. And I actually appreciate the way you described your husband's experience in the branch, because we really are a different type of bank. And we are driven by purpose. And it's hard to get people to understand that. It's even hard for people to experience it that have worked in other places until they really come and work here. So for us to just be able to have an impact, now we are in physical presence in 32 states, clients in all 50, that's great. That's fun. So now we get a chance to introduce ourselves in a way, not as a new bank, but as a bank that has over a 200-year track record and history of not only helping our clients, but also making impacts in the community. That's been fun. We've had some really great conversations out west, and we look forward to continue to have those same great conversations right here in our home, Chicago.
I've seen your awesome photographs every time you go out to California. You look like you're having a great time.
You got to go to Disneyland.
So Darrel, any final thoughts for those who have joined us this evening?
Look, hey, privileged to be here. Thank you for listening to my, pitiful career.
Teresa, that was great that you did that. I think this is going to be memorable forever.
But it's not about me. I want to thank all of my BMO colleagues for being here, because at the end of the day, the story I'm telling really is their story. And just really proud to be here and to be able to represent you, and also proud to be here to be able to represent the Executives Club of Chicago as a board member. So thank you for the opportunity.
Thank you. And now I'm going to introduce, for closing remarks, Charles Smith. But first, I want to shout out my colleagues from the Chicago Community Trust who are also here this evening. Thanks for being here, guys. Charles, take it away.
All right. Good evening. My name is Charles Smith, and I'm the founder of CS Insurance Strategies, but I also get to serve in the role of Executive Chairman for Business Leadership Council and Vice Chairman for World Business Chicago. So as Darrel did and as Andrea did, I have to shout out to my colleagues, BLC at this table and WBC in the back. I also want to give a round of applause to Margaret and your team. I mean, you bring the business community together. You're so collaborative and open with your programming. So thank you and your team for that. As I sat in the audience and I thought about this program and I heard about your story, Darrel, we've had a chance to talk in the past. I thought about some of the impact of your leadership. And I'm not sure if you remember this, but there was a time, you mentioned COVID a few times, where I called you one day and I said, hey, at BLC, we're having challenges getting PPP loans. Can you help us? Immediately, Darrel set up a concierge team for our members. And I'd like to say, first of all, thank you. And number two, I'm not sure where BLC would be today without your support for our members. So thank you for that. And as far as the Chicago Community Trust, I have a story about you. So one day I get a call about violence prevention in the city of Chicago. We all know how important public safety is in this city. So I have a conversation with Andrea and her team, and we talk about violence prevention, but not just violence prevention in this this very large macro way. We thought about it in a very hyper-local way. And what we realized is that smaller organizations weren't seeing the impact of some of these dollars. So I would like to say maybe in about 2 weeks, I know we stretched your team really thin, but in about 2 weeks, we raised a couple of $1 million, and we also were able to support a bunch of hyper-local organizations. I mean block club parties, things to that nature where kids and youth could actually see the impact of some of these dollars and learn about programming for the summer. So thank you for that.
Thank you.
So before I let you get your drinks, I'm tasked with some items. The first thing is you have a QR code on your table. Please take the survey. The more surveys we can get, the more information we get, and it's always impactful for the whole group. With that being said, please enjoy your evening, and make sure to mix and mingle a little more. Have a good night.